Hello, good morning, and welcome to another live technical analysis session. Starting off with the euro, main financial release for today could be the preliminary HICP rates for Germany. So, what we've been seeing in terms of manufacturing for Germany, in terms of the financial releases about half an hour ago, appears to be providing some support for the euro as they came in better than expected. Now, if we look at the particular pair from a more macro perspective, you can see a downwards movement sentiment having emerged for the euro, in which the dollar is strengthening. Now, I would attribute the predominant movement for the particular pair in terms of the dollar strengthening. So the ISM and S&P manufacturing PMI figures for February were released yesterday. Now, if you look at some websites, one is in the red and one is in the green. So the S&P came in lower than expected, whilst the ISM came in higher than expected. Now, both were above the figure of 50, however, which imply an expansion in manufacturing activity in the US. So despite the S&P manufacturing PMI figure coming in lower than expected, it was still above 50. And as such, may aid the narrative about the economic resilience of the US. As such, with more financial releases pointing to the US's economic resilience in spite of the currently high interest rate levels, it could allow some leeway for the Fed to maintain their restrictive monetary policy for a longer time period. And as such, the dollar may have strengthened, which in turn may have weakened the euro, JPY, British pound, etc. So, strengthening of the dollar, euro USD moves lower, bearish tendencies. From a technical point of view, look at the Bollinger Bands tilted towards the downside, implying a bearish market sentiment, in addition to the moving averages as well. RSI running along the figure of 30, implying that the bears appear to be still in control of the particular pair, taking aim for our S1 level of 1.07. We have resistance at the nearest consolidation before moving lower, so resistance at 1.0795. Such I would maintain a bearish outlook given that we have a downwards moving trend line, the Bollinger Bands, the moving averages, in addition to the RSI. For that, however, to continue, I would require a clear break below S1, potentially taking aim at S2. Now, if it does not break above R1 and fails to break below S1, we could maintain a sideways bias. But based on the financial releases that we're going to be having later on this week as well, a sideways bias may not be maintained for far too long. And what do we mean by that? Look at the number of Fed speakers that are due to speak today. So you have approximately 3 Fed speakers. Tomorrow, if I'm not mistaken, you have Fed Chair Powell. Such high volatility, and should they sound predominantly hawkish in nature, could break below S1, take aim, or even break below S2. And then you have S3 1.052. Now, if they're predominantly dovish in nature, then we could see the euro capitalizing on a potentially weaker dollar, taking aim for R1. And then at the end of the week, you have the NFP figures. So if we do maintain at some point later on this week a sideways bias, it could easily change by Friday afternoon following the release of the US employment data. But for today, bearish outlook. If it breaks below S1, I would not be surprised to see the pair correct up until this point. So temporary resistance level would coincide with the mid-range of the Bollinger Bands as well. So perhaps 2 4-hour candles coming back up, but failing to break above this bearish candle before continuing on its descent. So slight retracement before moving lower. Dollar JPY, so we're seeing no indication about a potential intervention by the government in terms of buying the JPY, which could allow the Japanese yen to weaken. For now, we're going to be maintaining our sideways bias for the particular pair. Note the narrowing of the Bollinger Bands and compare that to the euro. These are wide. British pound, let's see, widening as well. Let's see, that's something that's slightly narrow, if we do have any. But if you look at the other pairs in comparison, the dollar against the Japanese yen is very, very narrow, so low market volatility would maintain a sideways bias between S1 and R1. Moving average is smoothening out. RSI 57, so as well implying a neutral market sentiment. If it doesn't break above R1, sideways breaks above, then you can maintain a short term bullish outlook up until R2, upon which personally I would expect a potential intervention. Whereas if it breaks below S1, bearish outlook taking aim for S2. But overall appears to be staying between S1 and R1 for now. Dollar CAD, just so yes, narrowing of the Bollinger Bands as well, but compare that to the JPY, much narrower. Whereas dollar CAD more wide. So there is some space for the pair to play within. Our size resting on 15, narrowing of the Bollinger Bands, moving averages as well, neutral outlook for the dollar against the Canadian dollar. However, if you look at oil, which has just reached 85, well, touched on $85 per barrel, so breaking above R1, this upwards motion of oil could actually provide some support for the loonie. So if oil continues on its ascent, then we might see the particular pair moving in a downwards direction, but it would have to break below S1. And once again, reminding that the Canadian economy is an oil exporter, so higher oil prices could provide support for the loonie. But for the pair, in terms of technical, it would need to break below S1, break below the mid range first, take aim for S1, perhaps correct slightly higher, and then move below to S2. If it does not, you could maintain a sideways bias between S1 and R1. You can also look at RSI 50, smoothing Bollinger Bands and moving averages, imply low market volatility. But if you look at oil, that narrative appears to be changing. Oil moves higher, the loonie might strengthen as well. Moving on to the British pound, broken below RS1 level of 1.2575. I think this might be a retracement to the mid range of the Bollinger Bands. It's actually testing support turn to resistance. So for a bullish outlook, it would not only have to break below above S1, it would have to move towards R2. Simply breaking above R1, which is being tested now, would not be sufficient for a more longer term bullish outlook. It would have to break below R2 as well. As I've said, because this could be a slight correction to the mid range before moving lower. So I'd like it to actually try and reach R2. So clear break above and reach R2. Otherwise, if it fails to break above this particular point here, I'd say, which also coincides with the mid range, would still maintain a bearish outlook for the particular pair. This becomes R1. R2, then R3. S2 becomes S1, and then we need to find our S3 level. Hello to you as well. S2, and then we need to find S3. Let's go back. Let's see. Consolidation, moved higher, crossover. So I place my S3 level at the beginning of this upwards motion. Note it managed to break above, rested twice and thrice with this bullish candle before moving higher. Such appears to be a valid support level. Let's see volume as well. Low, and then higher. So I'll be placing my S3 at 1.2265. RSI 40, so some bearish tendencies. Might be recouping before moving lower. So I would expect this to be a market correction. The other scenario is that if it does not break above R1, then maintaining our bearish outlook. Two, this could be R4. And then let's add the text label. $1.2265. So we're all maintaining a bearish outlook for the particular pair. Widening of the Bollinger Bands may also imply high market volatility. Onto the Aussie. We know China's Caixin services PMI figures, which are due to be released tomorrow. Now, if you look at the NBS that was released on Sunday, that was better than expected. So economic resiliency from China could be supporting the Aussie as well. But we're also noting that the dollar is strengthening, so maintaining a relatively sideways bias. If China's Caixin services PMI figure that will come in better than expected tomorrow, we could see a temporary support for the Aussie. But for today, if the Fed officials are hawkish, it could stay in a sideways bias. So we have contradicting, I'd say, possibilities. So if you're expecting China's economic resilience to improve or to come in better than expected in terms of financial releases, then Aussie could strengthen. But on the other hand, you have a US economy which appears to be stronger than expected, and as such could weigh on the Aussie should the dollar strengthen. So for that, we're going to be maintaining a sideways bias between S1 and R1. Narrowing of the Bollinger Bands, RSI at 50, so the market appears to be in line with this expectation as well. So we're seeing the Aussie strengthen slightly, I'd say predominantly due to China, but then could weaken due to strength from the USA. So essentially a double-edged sword. OBV, no, actually, sorry. CCI, so currently channel index moving higher, RSI at 80. So the bulls appear to be in control of oil prices. Could also be spurred on by hints that China's economy may be recovering as well. So, given that China is the largest importer of oil on the planet, signs of resiliency in China could support oil prices, as you can see, temporarily reaching $85 per barrel, according to Bloomberg headline. And then, if we just check, on our chart, it was 84.64, but according to Bloomberg headline, it reached 85. So overall, I would still maintain a bullish outlook for crude oil, and I'll show you that from a technical point of view. So as I'm trying to fix the chart, placing support and resistance, just have a look. So you have the Bollinger Bands, which were narrowing, so implying low market volatility, and then suddenly you had an uptick. Now, note how it looks a bit. It doesn't look like a ship. It looks like it's moving in an upwards fashion. So it's very nice movement. Higher, break above an old high, higher lows. One, two, gaining some strength and moving higher. Look at the RSI as well. Let's just fix this first. Now, from a technical point of view, I think you can see what I'm seeing as well, which is upwards moving trend line continues to be validated. So you have a second, then you've got a third and a fourth touch, which makes it a valid upwards moving trend line. Then you look at the RSI, which is above 70, so bulls appear to be in control. Broken above an old resistance turned to support. All imply that the bulls appear to be in control of the particular commodity. Now, in terms of S2, we could bring it slightly higher to reflect that this has been broken. 80.30 for S2, and then for S3, we could keep it slightly lower just in case, because tensions in the Middle East are still high. So there's always that geopolitical risk. So let's just simply keep S3 slightly lower just in case something unexpected happens. So this becomes R2. Excuse me. And let's just look for R3. I'm ignoring this whole time, given that it would be too close to R2. Instead, I'm opting to look at this price action here on numerous occasions, fluctuating around or finding support or resistance. Note created this high, came back down, failed when it managed to break below though. Note 1, 2, 3. So opening, closing, and opening on this level, 90.55. As such, I place a greater emphasis on that level rather than that old high. Also, a bit further away than R2, and we could look at it from a more macro perspective. Just because it's here does not mean I should be placing support or resistance at this level. I like to see the price action. And then if I have R3 simply 10 cents away from R2, then what's the point? Like it could easily be broken. It might not be a significant resistance level. Whereas for 90.55, it appears that it might be a more significant resistance level, whereas the other might be a more of an intermediate one. So I'm opting for 90.55. But that being said as well, placing your resistance here does not mean you are wrong. It's just a personal preference that I think if it does come here, might meet some temporary resistance before actually meeting a heavier resistance level slightly higher at R3. And it's not that far away as well. Like if it was here though, then yes, and this was lower, then I would have taken this. But based on what we're seeing, R1, R2, R3, and trying to keep an equal distance between our support and resistance levels, I believe it is more prudent to take R3 at 90.55. Overall, for a bullish outlook to continue, it would have to break above R1, take aim for R2, but has to break above R1. Now, sideways bias, breaking below our upwards moving trend line, and then bouncing off S1 would be sufficient for a sideways bias. Now, if the next 4 hour candle starts roughly at this point, comes back down, breaks slightly below, but then the next candle comes back up, I wouldn't see it as a breaking below the trend line. It would have to make a clear break below. So take this candle, for example, and just place it here, make that red or green, and that would be clear. Simply piercing through would not be sufficient. I want to see a clear break below and then aim for S1. Fails to break below S1 and breaks below the upper swing trend line, sideways bias between S1 and R1. If it breaks above R1 and continues to validate the trend line, bullish outlook. Take aim potentially for R2, but if it breaks below S1, takes aim for S2, 80.30. Now, gold is a peculiar uh, circumstance. So, if the dollar is strengthening, then why is gold moving higher as well? That is a question we will attempt to answer. So, one could say it's from a technical point of view. You've got RSI at 70, implying a strong bullish market sentiment. The Bollinger Bands appear to be tilted towards the upside. All-time high figure was formed yesterday during the Easter holiday, but it's moving higher. And then we're saying that the dollar might strengthen. So why isn't gold moving lower? Logic would dictate that if it does move higher, that if the dollar moves higher, the gold, the precious metal might see perhaps even a retracement. But That was the retracement, and now appears to be moving higher once again. So one could attribute this to yields remaining steady. I haven't seen them today, but if they've remained relatively stable, that could mean that perhaps investors may be keeping their money into gold just yet and just waiting to see what happens in the US. One could also attribute this to geopolitical tensions. So, the recent strike, which, if I'm not mistaken, killed two generals, a consulate in the Middle East. Apologies. So that could keep risks elevated, maybe even higher. So it could be funneling safe haven inflows into gold potentially as well. Technical, it's broken above resistance, turn to support at S1, and then taking aim for R1 now, potentially at 2,300. So just look at gold. Let's see, there is an upwards moving trend line, which was drawn quite horribly. Let's move this out of the way. So you can see it's actually coinciding slightly with the mid range of the Bollinger Band. So if you're more to that technical analysis, coinciding mid range, so correction slightly lower, but higher highs, higher lows, comes back up, then retraces lower, perhaps to the upwards moving trend line. I'd still maintain a bullish outlook. Look at the RSI. So at this point, gold could be said that it was overbought as it was way above 70, but it's still at 70 now, so corrected lower. So the bulls appear to be still in control. Now, the ascent of the precious metal could be halted by the release of the US employment data on Friday. For now, though, we're maintaining a bullish outlook for the precious metal. These are support and resistance levels. And then for R3, we're going to be extrapolating once again the distance between R1 and R2, and then seeing what figure that gives us. We're also looking for big figures, so 2.3, 2.4, and actually that's 2.5. So 2.5K is R3. $1,000 difference between R1 and R2 makes this very easy for me to simply place R3 at 2.5K. It's a nice round big figure. It does not mean it won't meet resistance if it moves higher. So if it breaks above the hypothetical resistance level of 2.3K, it doesn't mean it won't meet resistance at 2,350 or 2,380. Just means that we're placing these equally apart in order to have some room to play. So it breaks above R1, for example, moves higher up until the mid range, but it doesn't break above R2. Well, it's still bullish. Even if it does correct lower, perhaps to R1. So we're giving it some room to correct. So you could see perhaps it moving higher, coming back down lower, and then moving higher. So higher highs and higher lows. Whereas if I placed, for example, let's just say 2,350. Let's say this was a hypothetical resistance level, since we don't have prior data. Now, it could meet resistance here, but it could break above and move higher. So we're looking at this from a more macro perspective. It looks nice, but would be a bit too close. I'd rather take round or uh, bigger figures so that we can look at this from bigger, from a longer time perspective. And then let's just place R3. Overall, upwards moving trend line, RSI, Bollinger Bands, bullish outlook for the precious metal, unless Fed speakers today are very hawkish. If they are very hawkish, then we might see a pullback on gold's price. But overall, you've got geopolitical tensions, you've got the technicals. all seem to be looking bullish for gold. But once again, could easily change. Note the Dow Jones 30 bouncing off R1, 40K. Might be a double top, but we'll see. Still validates the upwards moving trend line, however. So you might say that the bullish sentiment still persists, but might be slightly fading away. So the bulls are meeting heavy resistance at 40,000. Still validating the upwards moving trend line. So if it corrects down to S1, I wouldn't switch for a bearish outlook. I'd wait for it to break below S1. If it breaks above R1, I think that is self-explanatory. Bullish outlook, potential resistance at R2 at 41K. S&P, it's actually just broken above R1. It's just readjust R1 level to reflect that. Doesn't need to be moved even higher. Too high, excuse me. So 5.275. Validating this very tight upward moving channel as well. So maintaining a bullish outlook for the S&P 500. Nasdaq appears to be turning towards a sideways bias. Just look, it's fading on numerous occasions to break above R1. So the bullish momentum may be fading away. So I might see it moving between S1 and R1. Airbus might be correcting lower, but I actually just like to see the dollar index. Let's see, dollar index. This is outdated. Let's see. Even older. 15th of September. We need something. Which one is it? US dollar index. I think it's this one here. Yep, this is the proper, the one that's updated. That's still going on. This is a bit interesting. So the dollar is slightly weakening. So that makes sense in terms of the precious metal. Now it appears to be a bit more clear, but moved high. Then you'll have this one, RSI 59. So some bullish tendencies, but appear to be fading slightly away. You put us two, and then around here, two very nice blocks. Then you've got resistance. So it might be finding some resistance, which could actually make sense as to why the precious metal is slightly moving higher. But if you look at the euro, wait, let's move. That's a 4-hour chart. Still bullish. That was on a 1 hour. On the 4-hour, 70. So once again, it's a peculiar, let's say, scenario in which the gold is moving higher, and then you've got the dollar index. So the dollar in general moving higher as well, correcting slightly lower. I would still be bullish. This might have been a bit too much, but still overall technicals look to be bullish. And then if you go back to gold, the technicals appear to be bullish as well. So we're seeing a bit of a divergence between their inverse relationship. Gold is moving higher, so is the dollar. Could attribute this to potentially geopolitical tensions. We have our gold report coming out later on today, and we'll dive in more into gold if that is interesting for you, and keep an eye out for that report. And with that, I think we're done for today. Thank you for watching, and I'll see you tomorrow.
get started. So sorry about that. I, for some reason, could not turn on my camera. Okay, but let's just get into it. So, as per usual, a risk warning and disclaimer first. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. So do your own due diligence before investing any of your money. Hey, I'm Melanie, and I will be your speaker for today. I'm an investment analyst from Everest Virtual Group, who are finalists for Best FX and Equity Research in 2019 to 2021. So here's our agenda for today. We're going to understand what makes a valid trend line and trend channel, what exactly are breakouts and fakeouts, and we're going to look at some indicators to determine momentum and look at improving the probability of successful breakouts. Okay, so let's start off with trend lines. So here's what makes a valid ascending trend line. Firstly, they should be drawn from the bottom if it's an ascending line and not the top. Next, trend lines should have at least 3 significant touches, and 2 touches tend to be more coincidental, which is why we typically would recommend 3. So here are a couple of examples. Okay, you can see how significant exactly these troughs should be or the swing lows should be in order for them to be considered valid points on a trend line. Okay, here's another example, and here is an example of a descending trend line. So similarly to ascending, they should also have at least 3 significant touches, but for descending, they should be drawn from the top and not the bottom. Okay, here's another example. In this case, we have really nice 4 swing highs that touch our trend line. Okay, but 3 is enough. Here's another example. Okay, so here we've drawn out exactly how significant these touches need to be for it to be considered valid. And then we want to watch out for at least 3 significant touches because then there could be a possibility that price would likely react off of that trend line again, which you can see is what happened here. Okay, so price actually reversed back to the trend line and is playing the reaction off of the 4th touch. Okay, now pretty straightforward. So let me know in the chat whether you guys think that this is a valid trend line or not. It's not. Yeah, Victor, yeah, trend here is down. Yeah, so it should be drawn on top. Yes. Okay, yeah, pretty straightforward. I think you guys have gotten it, so let's just move on. So now we're gonna look at drawing trend channels. So for trend channels, they require at least 4 significant touches. So 2 at the top, 2 at the bottom. And they don't need to be in consecutive order, like in this image here. Okay, so for example, over here, this is also consecutive, as in top, bottom, but it can also be top, top, bottom, or bottom, bottom, top, top. Yeah, so the order doesn't really matter as long as it's significant, swing highs and swing lows, and they touch your channel 4 times. Okay, this is an example of an ascending trend channel. Okay, now let's take a look at liquidity traps. Okay, so what exactly is a liquidity trap? So it's basically a situation in which monetary policy becomes ineffective in stimulating the economy, even when interest rates are near or at zero. So this occurs because people and businesses are hesitant to spend their money, even at low borrowing costs, leading to a lack of demand for goods and services. So in the context of trading, a liquidity trap can cause problems for market participants as it may lead to a decrease in market liquidity. So that basically means that it'll be more difficult for traders to enter or exit positions quickly and at their desired prices. So this can result in wider bid-ask spreads, increased volatility, and decreased market efficiency. So central banks actually try to address liquidity traps by using unconventional monetary policies. Okay, so some of these include quantitative easing. So they inject more money into the economy so that they can encourage spending. However, the impact of these policies on financial markets can be difficult to predict and may lead to unintended consequences. So here's an example of a liquidity trap. Okay. So firstly, we see price reversing at the swing high. Once price surpasses the swing high resistance, right, it clears the orders and then it drops below the resistance again. Okay, so another example here, price breaks out of the ascending trend line as well as the ascending trend channel. So it shoots out of it, clears the orders, and then at the point 1.04791, this swing high price reversed and it proceeded to drop back down. Okay. Okay, now let's combine trend lines, trend channels, support lines, pullbacks, and overlaps. Okay, here is just a checklist. Okay, so you can screenshot it if you want. I'm just gonna get rid of my face. Um, when I was starting out with technical analysis, this checklist was really helpful for me. Yeah, but it's just a list of things to look out for. You can find this checklist and other tutorials on the forexarmy.com website as well. But basically, for this checklist, it just tells you that if you combine multiple technical analysis methods, um, your analysis would then be more accurate. Yep, I'll just type into the chat. Just forexarmy.com. Okay, maybe I'll show you guys what the website looks like as well. Okay. Mm, this Forex Factory, sorry. Forex Army, this one. Okay, so actually it's theforexarmy.com. Okay. So here you'll find some trading guides. So we have guides on Fibonacci, support and resistance. We also have trading tools that you can download for free and just implement into your MT4. Okay. Yeah. So we have Fibonacci, how to draw it correctly, support and resistance, and a couple of MT4 downloadable trading tools as well. Okay. Let's see. So yeah, this really in-depth and really easy to understand Fibonacci guides, as well as some risk management techniques. So this is really important. Support and resistance. So all of these as well. Yeah, okay. You can go and explore this website on your own. Okay, so here's another checklist. So this is specific to playing the continuation. So you can play the bounce or reversal by firstly checking whether price respects the Ichimoku. Secondly, trend line, key horizontal support or resistance levels, any key Fibonacci levels that it is near. And these are the four Fibonacci techniques that we use. And where's the next key level that it might go? So you fine tune these levels by looking for confluence areas. So confluence areas tend to be a mixture of um, Fibonacci levels as well as horizontal levels. So like your overlaps, pullback levels, as well as pivot point levels if you do use that indicator. So when you find a couple of levels that match up at the same area, it doesn't have to be a level, it can be an area. As long as it's close together, that's fine. Yeah, then that is more confirmation that your analysis is correct and that price is likely to be attracted to that level. Okay, so in this example, I have an ascending trend channel. Okay, and price is moving within the trend channel. So in this case, I'm playing the continuation, and the continuation in this case is simply an uptrend. Okay, and when I say bounce or reversal, I'm looking at price bouncing off of the trend channel, which you see over here. Bounce off it, it moves within the trend channel. So that's why we say continuation. Okay, next, another example, but in this case, it's a downward trend channel. So same thing, we are looking at playing the continuation. Bounce or reversal refers to price bouncing off of the trend, the sides of the channel, which you can see over here. And it happens multiple times in this chart. Okay, so if you were to put your entry over here, I made a buy entry to this trend channel here, and then you did that a couple of times, it would have been really like you would have made a lot of profit. Okay, now let's take a look at how we can play the breakout. So using the same checklist, is this the same checklist? Okay, not exactly, but looking at the same kind of indicators. Firstly, does price cross below the Ichimoku? So if price crosses below the Ichimoku, it suggests that the signal that Ichimoku is giving us is bearish. Do we have the Ichimoku momentum on our side? So is it bearish or bullish? Did price break any trend line? Basically, these three breakouts basically suggest that there is a change in trend. Okay, and then where is the next key level it could go to? Same thing over here, we are looking for confluence areas as well. Okay, playing the breakout. So first example here, I'm using a Fibonacci projection. So if you're not familiar with what a Fibonacci projection is, basically you're using the extension tool. If you're looking at TradingView, it's the Fibonacci extension tool, which has 3 points. So this is my starting, middle, and ending point. And in order to use this or to recognize that you can use it, we are looking for kind of a lightning bolt shape. So basically something like this, okay, and then it moves upwards. So, and for that, we use 3 levels, 61.8, 78.6, as well as a 100%. Okay. So I have a resistance level here. We have two swing highs, and then I have another, excuse me, swing high resistance here at 135.147. Okay, so from this level, price has broken out of this confluence area, this multiple swing high resistance. So it's broken out of it, so we're expecting it to continue to shoot upwards towards any one of these levels. Okay, and that's exactly what it did over here. So once price reaches our 61.8, we can expect it to continue, or once it breaks out of the 61.8, we can then expect it to continue to go towards our 78.6 level. Okay, and our 78.6 level is about the same level as the swing high resistance as well. So, yeah. Okay, now let's move on. So this is another example. In this case, we are looking at a descending trend channel. We're looking at descending trend channel firstly. Secondly, we are looking at this ascending trend line. But then we notice that price has recently broken out of this descending trend line, ascending trend line. So it's broken out of the ascending trend line, suggesting that it's gonna move downwards. Okay, so 2 points, descending trend channel breaking out of the trend line. Next, we have price moving below the Ichimoku cloud. So remember I mentioned earlier that if it moves below the Ichimoku cloud, then it's a bearish signal. So we have three indicators, graphical and indicator, a momentum indicator that tell us that price is going to be bearish. Okay, so then we can expect it to continue towards this swing low support level here. Okay, and you can see that it definitely did hit where we expected it to go. Okay, another example here. Price recently broke out of the ascending trend channel, so that's point one. Point two, price is currently at this 127.2% level. So here we have a Fibonacci extension. So, okay, let me just go to our Forex Army website. If you missed our Fibonacci series, um, not to worry, but that's basically where we go through all of the different techniques in detail. Mm, hmm. Okay, we might not have that here. Okay, we have this. These are Fibonacci expansions. So they go from 0 to the negatives. And these also use that same lightning bolt shape as the projection. Okay, I think we don't talk about extensions here. Hmm, that's so weird. Okay, never mind. I'll just talk about it now. So for Fibonacci extension, we are looking at the above 100 range. So for the above 100 Fibonacci levels, we are looking at 127.2 and 161.8. Okay, and how you decide whether or not you want to use this level, you look for this shape, this like V shape. Okay, in this case, it's a little bit difficult to see because it's inverted. So it's inverted tick shape. But you can just imagine a Nike tick, just an upright tick. Yeah, so as long as the head of the tick is smaller than the tail and price retraces 100% of this initial shape, then you can go ahead and use this Fibonacci tool. Okay, so in this case, we see that price recently broke out of this ascending trend channel. It's also currently breaking out of this 127.2% level, Fibonacci level. So we're expecting price, once it breaks out, we're expecting price to continue to this 161.8. Okay, so 161.8 is also in line with this swing low support level at 0.66420. Okay, so we want to try and make sure that we line up Fibonacci with graphical levels as much as possible. And you can see here that that's exactly what happened. Okay, we see price break the level, the 127.2% level, and went all the way down to 161.8, just as we expected, caught our trade, and then shot back up. Okay, here's another example. So price recently broke out of this descending trend line. Okay, so using Fibonacci extension again, the same Nike tick shape, we can see price is currently breaking out of this 127.2% level. Okay, and we're expecting it to hit our take profit here at 85.724. That's in line with the 161.8% Fibonacci extension. Okay, and you can see that's exactly what happened here as well. So for our take profit, you can see that we have this 161.8 obviously, but it's also in line once again with a swing high resistance as well. And our buy entry, as you can see here, is also an overlap level because we have price reacting off of it from a swing low and a couple of swing highs as well. Okay, so that's all for my slides. Now I'm gonna go ahead and pull out some charts. So let me know in the chat if there are any specific charts that you'd like me to analyze. Okay, I'll just go ahead and look at gold first. Mm, okay, so let's start off with the higher time frames so that we get an idea of where prices are headed, just the general direction. Okay, we have three swing high resistances here, and we have price moving downwards. On our daily time frame, we have a swing, we have three swing highs that match our descending trend, our descending trend line. Okay, so this is a valid trend line. Okay, and maybe I'll just place my swing first resistance there, and my second resistance here, or rather my first support here, and okay, so good habit is to try and see how far back you can put your support and resistance levels. So the reason for this is because you want to see, it's easier to see how many times price has reacted off the level, so you know how significant that level is. And you can see that this level is pretty significant with price reversing off of it a couple of times. Okay, next we have another swing, another second support here, or maybe closer here. Okay, yeah. So the reason why I chose here instead of there is because here we have many swing highs and lows. Okay, so here we are playing the continuation. Now that I have my Fibonacci levels, I'm gonna go ahead and um, add some oop, add some Fibonacci levels to support my support and resistance levels. Oh wait, this is the daily time frame. Okay, I'm gonna analyze it on either the 1 or 4 hour time frame instead. Okay, so here's the 4 hour time frame. Let's see if we have a trend channel. Okay, no, we don't. Okay, but we can kind of, do we have a trend line? Okay, also no, because we have this area here. Okay, um, okay, we don't have any support, any trend channels or trend lines, but we will just go ahead and add some support and resistance levels now. Okay, so this is my first support. Okay, I'm just gonna make this a dotted line because price is super close to this level. But I want to highlight it because of this swing high here. Okay, and then a resistance here. And here. Okay, now let's add some Fibonacci levels. Okay, I can see that my 50% lines up with my first resistance. 50, 70, no. This is a little bit too far, but if your 50% is, like if you look at my 50%, it's kind of about my first resistance. So that's fine. Okay, next, let's add some Okay, I have my 100% lining up with my first support. Okay, but this is no longer valid because price has already broken out of the 100%. So even though it does line up with my first support, I can't use that anymore. Okay, so sometimes you do see some charts that are a little bit more difficult to find Fibonacci levels. Okay, I can see that my 100% lines up, and you can see this shape that I'm using for my projection. So I'm using a projection, as you can see my 61.8, 70.6, and 100, and also these 3 points. So I'm looking for this kind of shape here. Okay, so my 100% lines up. Okay, and again, the level, or rather the tool that I use is this one over here, the trend-based fib extension. Okay, I think that's all the levels that we have for now. Now let's go in with some indicators. So over here, we can see that maybe, okay, yeah, so we can see that this 50% lines up nicely with my first resistance here. Okay, and we typically will trade according to the the trend. So here we see that price is moving upwards. So we're likely to expect it to move upwards to our first resistance once price actually breaks out of this intermediate level. Okay, so let's pull out some levels to support this. Okay, and you can see price is moving above the Ichimoku cloud. Um, MACD is also giving us a bullish signal. So I like to use MACD and Ichimoku because at one glance I can see exactly what the signals are. Okay. Okay. RSI isn't really telling us much. Now let me pull out my oh yeah, exponential and simple. So I like to use these two because not only can I check each indicator at the same time, but also I can see that when there is a crossover that typically suggests that the trend is reversing, or that the trend is changing. Okay, so here we can see that currently there is no crossover between the two, and in fact price is moving above our SMA, simple moving average. So it suggests that price is gonna continue moving upwards. Okay. Okay, let me know if there are any other charts you'd like me to go through or any other questions. Okay, if not, maybe I'll go ahead and analyze DXY as well. Okay, just before the inflation reports are released this coming week, I think tomorrow. Okay, so here's our weekly time frame. We see prices generally in an uptrend. Okay, but there is a slight reversal over here. Okay, let's look at our lower time frames. Okay, so earlier we talked about trend channels and the breakouts of trend channels. So this could be a possible breakout of a trend channel because we have two swing highs at the top as well as two swing lows. Okay, so this actually could be an example of a breakout as well. Okay, so we're still generally bullish on our weekly and our daily time frames. Now, if we take a look at our 4-hour time frame, you can see this uptrend over here as well. So also pretty bullish, except for this reversal here. Okay, but we typically will follow the trend. Okay, now let's get into our analysis. Um, okay. Even though our weekly and daily time frames give us a bullish signal, this is kind of bearish because price is breaking out of the trend line. Okay, so we'll just keep that in mind. The mix in signals, in graphical signals. Okay, and that's why we use indicators, momentum indicators, as well as Fibonacci levels and graphical as well. Okay, so this is my first resistance. Mm, let's see if there are any levels that are closer. Okay, I'll just leave my first support here at this swing low and then change this to second support because this level is closer to my first resistance. Okay. Okay, now let's look at our Fibonacci levels again. Okay, now I'm going to use my extension. So I'm looking at the above 100 levels. And you can see that my above 100 levels line up nicely with my first support and second support. Okay, so this is the V shape that I'm talking about. Okay, in this case, it's a bit inverted. If it would be like that. Okay, okay, I have a 38.2 and 23.6 level. Okay, that both line up nicely. Okay, so we already have this confluence area here. Okay, which is why we are seeing so much resistance here at this level. Yeah, I'm gonna put my second resistance here as well. Okay, but we can see that price is breaking out of our first resistance. So once it breaks out of this confluence area, we'll definitely see it approach our first support and the 127. And then subsequently, once it breaks out of that, we'll see it move towards the 161.8 because the 161.8 is, or our second support is also an area of confluence. Okay, we have the 38.2 and this 161.8, along with this second support, which, as I mentioned earlier, is an overlap level. Because you swing high here, swing high here, swing low there. Okay, so this is a confluence area, which means price is likely to be attracted to that area. Okay, now let's take a look at some indicators. Okay, Ichimoku is giving us bearish. MACD is also supporting our analysis. Let's look at RSI. Okay, RSI, let's see if we have a trend line. Okay, we do have a trend line on our RSI. Okay, so it supports our bearish signal as well. Okay, stochastic. Okay, stochastic isn't telling us much. Okay, we see that price crossover. Okay, which means um just after price reversed. So you see this uptrend here. This is what I mean by looking for a crossover when you're looking at EMA and SMA, because a crossover would typically mean that price is likely to reverse its trend, which is what we saw here. Okay, so definitely moving downwards, especially with price moving below both of these indicators currently. So overall, all of our indicators that we've used support our analysis. Okay, let me know if you guys have any other questions or any requests. Okay, if there is nothing else, yep, hi. Yeah, Demi Lola. Yeah, feel free to type your question in the chat.
Okay, can you hear me now? Can you hear me?
Yeah, hi.
Yeah, hi. The first resistance is a bit low,
Mhm.
like the swing low. The
Um,
swing low, first resistance,
yeah,
swing low.
is
How
what?
to
Sorry?
come to that point?
How did I come
Swing
to the
low.
first resistance?
Yes, yes, on the swing low. I mean, resistance supposed to be at the top, not bottom.
It is kind of at the top if I just zoom in a bit. Price has recently broken under it. Can you see? And also because um over here, right, at this, let me circle it here. Okay. Even though this is a support, right? So you would expect it to be a support, but price has broken under it. Okay, so once it breaks under, it becomes a pullback resistance because we're expecting price to pull back to it.
Okay.
Okay.
Because okay, the reason why you called it false resistance because it's the nearest it is the nearest I mean that's the last bottom, right?
Yes. It actually, okay, so resistance, you're right, should be like this. So like at the peak, right? So you're right.
Exactly.
But in this case, because price has passed under it, so I'm actually using this as my level of reference. Because price has
Okay, in
passed
this
under.
case, okay, you mean once the price pass under it under the let me say the previous low, it's become a resistance level.
Yeah, so this is what we call a pullback resistance. Yeah. Okay, maybe I'll pull out last week's slides to show you what I mean, because we still have a bit of time. So we covered this last week. Okay, here. Okay, so a pullback is like this. So resistance, similar to what we saw earlier, here is my support, right? Once price breaks under it, it becomes a resistance, a pullback resistance.
Okay, pullback resistance. Okay, once price break the previous low, it becomes pullback resistance.
Yeah, and then once price reverses back to that, it then becomes an overlap. So like over here in this example here, it's a pullback, and then if you look at the GIF, once it returns to that level, it becomes an overlap. So yeah,
Overlap. Okay, once it's gone too far, it become overlap.
yes. Okay,
Okay,
does that answer your question?
yes, I grabbed. At least I'll further my analysis again, but I understand what you mean by what is it called?
Okay.
There was the first resistance. The first resistance, the line you drew, which is the pullback resistance. I understand it
Yeah.
now.
But yeah, it is a little bit close to where price is at. So I understand your concern as well.
All right. Okay.
Okay. Okay. If
So
there are no other questions, um, yeah, then that's all for today.
why okay, the second
Yeah.
resistance, sorry, the second resistance is is clear. It's clear to me. I mean, the first resistance should be at the peak.
Oh yeah, you can place it here as well. It's just that I prefer my resistance and support levels not so far away from where price is currently at. But yeah, it can be at the peak as well.
Okay. But why did you bring the resistance to the edge of the is it the edge? Is that the edge or neck?
Because of the swing high here.
Yes.
Yeah,
So
and because
okay,
I
so
prefer it a little bit closer to my current price. So current price is here, so I prefer it slightly lower, closer to where my current price is. But because our analysis anyway is we're expecting it to go down, so you can place it here as well. Because technically our second resistance would be our stop loss in this case, right?
okay.
So you could place it here as well. It's entirely up to you.
Okay, we are actually going for, in this case, you're actually going for a sell, not buy. So which means the second resistance should be the maximum stop loss.
Yes,
The first resistance, sorry.
will be our entry, our sell entry. Oh, yeah, our sell entry. Then our first support would be our take profit. And then once price breaks that, then we can go in for another sell towards our second support. Yeah.
So how did you come about selling this chart?
Sorry?
How do you figure out sell in this chart?
How do I what? Sorry?
How do you figure out the chart? The market is going downward. How did you figure it out? I mean, it's going on the
Because
bearish.
yeah, because this ascending trend line, right? So we have an ascending trend line here, and price recently broke out of it. So it gives us a bearish signal. And then we also pulled out our indicators. So you see our MACD is giving us bearish signals. Ichimoku price is moving below the cloud. RSI is it's moving in this descending trend line. Yeah, if I use the EMA and SMA, it's also moving below the indicators. So all of our indicators and our graphical analysis all give us a bearish signal.
Okay. I mean, I can see the RSI. I can see the RSI, which is quite short for me. It is giving us a bearish, it is giving us a bearish tone, and the MAC, which is the MACD, correct?
Yes.
The MACD is also giving us a bearish trend as well.
Yeah.
But for the MACD, I'm not familiar with it. The one I'm familiar with is just the MA, which is the moving average.
Yeah.
I'm just familiar with the
Yeah,
moving
that's
average.
just the Ichimoku and the MACD are pretty easy to use. So yeah, you can just read up on those and use them in your trading as well. Pretty easy to use.
Yeah, I see. I will learn that as well. It's not part of I never use it for my analysis all the while because I use MA. That's what I'm being taught with. I use the moving average, but I think I will add RSI. Thank God for your analysis. I will add RSI to it. Let's continue. I will add RSI just to know my trend and to help.
Yeah.
The
Okay.
RSI is more I think it's friendly to be used.
Mm-hmm.
It's user friendly.
Yeah.
So and now I believe the RSI what is it called? The break on the chart. Sorry, I just hope I'm not just popping more question on you.
Sure.
Okay. I just want us to be on the same page. The RSI has confirmed the bearish trend. What else can confirm the bearish trend?
Okay, there are a lot of ways to use the RSI. Here I'm just looking for a trend line here. You can also look at so if you enable the lines, so the upper and lower lines, I mean here, the upper and middle bands, right? If it's above the upper band, okay, let me make it bigger. So if it's above the upper band, it's oversold. So it suggests that price is gonna drop, as you can see here. If it's below the lower band, it means it's sorry. If it's above the upper band, that means it's overbought. So we can expect it to drop. If it's below the lower band, it's oversold. So we can expect it to go up. Okay, that's another way. Yeah, another way is by looking at divergences, but we have another webinar for that, so you can stay tuned for that as well. So we'll go more in depth because I don't really have the time to go in depth right now. But yeah, those are the three ways that you can use RSI.
Okay.
Okay.
What
That's
about
all the time that I have for you guys today. Thank you guys so much for joining me. Yeah, I hope you guys learned something and found this helpful. And I will see you guys again next Wednesday. Thanks, everyone. Bye.
all right, thank you. Bye.
Bye. Thanks, everyone.